Hello everyone, welcome back to this week's Technical Insights. Last week, global equity markets fell and safe haven assets like gold hit a new record high. In the middle of last week, Donald Trump announced a 25% tariffs on all cars that are not made in the US. This caused automotive stocks around the world to suffer heavy losses and raised further concerns of an economic slowdown. On Friday, we also saw the latest inflation reading via the core PCE price index, which was higher than expected, rising to 2.8% in February from 2.7% in the previous month, reflecting a 0.4% increase for the month, causing investors to be worried about persistent inflation. All three major US indices ended the day lower and notched their third straight day of trading losses. The Dow Jones Industrial Average lost 715 points or 1.69% to end at 41,583 points. Broad Index S&P 500 lost 112 points or 1.97% to finish at 5,580 points. Nasdaq Composite Index plunged 481 points or 2.7% to end at 17,322 points. The biggest losers on Friday includes consumer discretionary stocks, technology stocks, as well as financial stocks, but utility stocks managed to finish higher. For the trading week, the Dow Jones Index declined by 0.96%, its third losing week in the past 1 month. Broad Index S&P 500 dropped 1.53%, its fifth losing week in 6, and tech-heavy Nasdaq fell by 2.59%, on track for a more than 8% loss this month and likely its worst performance since December 2022. Investors are now bracing for the US reciprocal tariff that will kick in on 2nd of April this week, which may be much broader than previously anticipated instead of just matching the other countries' tariffs currently imposed on the US. This massive uncertainty regarding the target, size, and scope of the tariffs may cause market to move down further in the next few weeks. In Asia, Hong Kong stocks also ended lower on Friday, closing the week in the red as profit-taking took center stage amid the renewed tariff fear. Hong Kong Hang Seng Index dropped by 0.65% or 152 points to settle at 23,426 points. The Hang Seng Tech Index also fell 1.48% or 82 points to end at 5,506 points. Investor sentiment in the Chinese market faded immediately after the 25% car tariffs from the US and left investors bracing for more tariff turmoil on the 2nd of April. EV stocks, which closed mixed last Thursday, dropped further on Friday as investors were bearish on car makers over the potential impact of the new tariffs. EV maker NIO plunged more than 7% after it announced a Hong Kong 4.03 billion equity placement. The firm is also offering 136 million Class A ordinary shares at Hong Kong dollars 29.46 a piece, aiming to use the proceeds to fund further research and developments as well as for corporate needs. China President Xi Jinping urged a gathering of global CEOs on Friday to protect industrial and supply chains, as Beijing seeks to assure foreign firms' concerns over its economy in the face of tariff risk. Xi Jinping also made flash pledges to improve access and regain market confidence during the meeting in Beijing. For the trading week, the Hang Seng Index dropped 1.11%, while the Hang Seng Tech Index lost 2.36%. Both indices has now clocked its third consecutive losing week in a row. Back to Singapore, our local market is looking slightly brighter. We ended the last trading session of the first quarter this year, and STI briefly surpassed the 4,000 handle for the first time, making a fresh record high at 4,005 points before closing lower on Friday. On Friday, the benchmark index dropped 9 points or 0.23% to finish at 3,972 points. This is the first losing day in 5. And for the trading week, the STI is up 45 points or 1.17% for the second consecutive winning week. Year to date, the STI has now clocked a 4.9% gain. If you include dividend distribution, that will boost the total returns of the STI to 5.3%. This figure matched the pace that we saw last year, bringing the average 10-year total return of the STI to around 5.6%. So amid the instability in the global markets, Singapore stocks could still have a position in our portfolio to help us weather through the volatile environment that we see in the global markets right now. Looking ahead, the STI 12-month consensus target price is now around 4,250 points or 4,260 points. Most of the upward revision in STI stocks happened in the first quarter of this year during the busy earnings seasons that we saw last month. In the coming May earnings seasons, it will be less busy as some companies may not be providing quarterly business updates. Our three local banks also ended Friday lower. DBS dropped 0.24% and UOB fell 0.46%, while OCBC lost 0.44%. Top gainer on the benchmark STI index last Friday includes SGX, which is up 0.91%, ST Engineering up 0.89%, and Singtel was up 0.88%. At the other end of the table, the FI Retail Group lost 2.05% and Hong Kong Land fell 2.04%, while Seatrium also dropped 1.4%. So for this week's technical analysis, let's take a look at Seatrium. Last Friday, Seatrium share price closed lower by 3 cents or 1.4% to finish at $2.11. For the trading week, we can see that their share price lost 5 cents or 2.31% after gaining 3.35% the previous week. From the chart, we noted that Seatrium share price has been on an uptrend since the second half of 2024, after hitting a low of $1.36 on the 28th of June last year. Seatrium share price then touched a high of $2.15 on the 8th of October over here, before retracing back to the low of 1.83 cents in the middle of November. This year, Seatrium share price hit a high of $2.60 on the 17th of February, before coming down again to find support at the 100 days moving average, the amber line that you see here, at $2.11 now. The next support level for Seatrium share price will be the lower bound of the Bollinger Band, now at the $2.07 level, with the red line, the 200 days moving average, as the next support level at $1.87. The immediate resistance level will be seen at the blue line, which is the 50 days moving average, now at $2.22, which was previously tested here on the 3rd of March, but was rejected convincingly. If we do breach the 50 days moving average this time round at $2.22, the next target price for Seatrium will be back to the year-to-date high at $2.60, which we saw in February. Looking at the indicators, the MACD do have a slight positive reading now, which is indicating a very small positive momentum. But the momentum has been coming down in the past 3 trading sessions. The latest RSI reading at 44 points is also 6 points away from the 50-point neutral mark, meaning the momentum is still very weak, and Seatrium share price has still not reached the oversold level of RSI 30. So with the MACD indicator and the RSI indicating that the uptrend momentum is likely to be weak for Seatrium share price in the near term, investors will need to be patient to look out for further pullback in Seatrium share price to the next support level at $2.07, which is the low bound of the Bollinger Band, before accumulating on Seatrium shares again to target the next immediate resistance level at $2.22 or even the year-to-date high at $2.60. Based on the 9 analysts covering Seatrium in the past 3 months, 6 have a strong buy call and 3 have a buy call. There were no hold and sell recommendations, and the average 12-month target price is $2.79, with a maximum estimate of $3 and a minimum estimate of $2.50. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.